The Fed, as we know it, is a third central bank. It is not U.S. It is not federal. It has no reserves. It has nothing. It is a cartel owned by the Rothschilds. So if you understand that, and you understand why guys like Ron Paul say, and the Fed and all this. But the other part about it is, so what happened in 1913, the Fed was created and the 16th Amendment was passed because money had to come in through taxation. So when they print money, the only way they get it back is via taxes, which is why Tom is here.
So here's our 4 quadrants. How much tax you pay depends heavily on which quadrant you're in. So if you're an employee and you make a good salary, you're probably going to pay about 40%.
This is worldwide too.
It is. It's really interesting. We travel all over the world, and I always get to look at the tax law when we go somewhere, and the rates are remarkably similar. The brackets are different, but the top rates are about the same. If you're self-employed, you get more education. You decide to start your business, you're up to 60%. But a big business owner is down around 20%. This is why Warren Buffett famously said that he pays a lower tax rate than his secretary. She's an employee, he's a big business owner. That's the fundamental difference there. And then, if you're a professional investor, you get down to 0. That's what Kenny was talking about, okay? He's a professional investor, hasn't paid taxes. So basically, if you look over here, this is Biden, right? This is Harris, attorney. Trump. You know, Trump, New York Times said Trump 10 out of 15 years paid no tax and 2 years paid $750 in tax. And somebody asked me, what do you think about Trump paying $750 in tax? And I said his accountant should be fired. Because why is he paying any at all? Because Trump uses so much debt, it's so hard for him to ever pay tax. Because he does what Kenny does, but on a larger scale, right? That's his business. So, love him or hate him, this is the way the tax law works. So the tax law is about 6,000 pages, and there's one line in the tax law that says all income's taxable, unless we say it isn't. There's another line that says nothing's deductible, unless we say it is. There's a few pages that tell you how much tax to pay, but the rest of it, almost literally 99.9% of it, is just an instruction guide on how to reduce your taxes. It's very much a roadmap. And the reason is because there's incentives. And when you look at who does the government want to incentivize? Okay, well, not employees. Employees consume. Trina said it earlier. Consumers pay a lot of tax. This is why savers are losers. They're consumers. Okay, so if you consume it, if you're an employee, okay, well, they're just going to pay tax. As a self-employed, if you don't pay attention, you're just going to pay the same amount of tax they do, plus extra. But what happens is that the government says, well, wait a minute, what would we really like? Well, over here, what we really want is we want to incentivize job creation. So that's why this is 500 employees or more, okay? Once you get over 500 employees, now you're really creating jobs. The government wants jobs created. That's one of their #1 goals. What about down here? Well, they want housing. Kenny talked about that. But what else do they want? Energy, agriculture, and technology. So they incentivize all of those. That's what they incentivize. So once you get in your mindset that the government, I get to choose. Right, we're all partners with the government. I get to choose. Am I a silent partner over here, or am I an active partner over here doing what the government wants done? Okay, these people, you know, there's been a lot of discussion lately about the rich people cheating on their taxes. My experience is the rich don't have to cheat because they have all the incentives. The people who are cheating, frankly, #1 cheaters in the world are right here. And these are the people, they're your stylists. Thank you for admitting that. They're your stylists. They're your contractors that say, here, pay me cash and I'll give you a 20% discount. What is that? Well, they'd rather give you a 20% discount than pay the government 60% in tax. That's all that is. That's just money under the table. It's under the table from the government. So that's where all the cheating is, okay? So don't believe this. These people don't need to cheat. You know, Trump, I love this. So I love that New York Times article. I know he hated it, but I loved it. Because basically what it said is, it said he made $400 million on The Apprentice. That's his S. That's his S income. But what did he do? He did just like Robert was talking about. He borrowed, rolled it into real estate, and what did he get back? A $70 million refund. He rolls it into real estate, his hotels, golf courses, etc. And what does he get back? He gets a $70 million refund. That's what they were complaining about. They're complaining to the wrong person, right? You want to complain to the government because they're the ones who make the laws. All we're doing, our job and my job, is just to explain how the laws work. And then we get to choose. Now you get a choice, right? You can pay taxes over here if you want, but you don't have to. Once you get the education, you can pay taxes over here. Does that make sense so far? Okay. So let's go to Kenny's side of things. Okay, this is the financial statement that Robert has right over here, cash flow. This is financial statement. We have income, expense, asset, and liability. Okay, what happens for most people? Money comes in and it goes out as taxes. So what's happening is they're either consuming it or they're saving it. And people who are consumer save, they pay taxes on 100% of their income. That's the rules. You consume it or you save it, you pay 100% tax on your income, right? So what Greg does, and he was telling me, he goes, well, I've been putting all my money back in my business, right? If you put your money back in your business, you pay no tax. That's called a deduction. That's just called a deduction. And if we have time, I'll show you how to make anything deductible, okay?
Right.
So hold on to that thought. This is really common. All business owners know this. You guys are deducting the money that you spend on your business, right? Your business expenses, you're deducting that. That's just an expense here, okay? What Robert does differently than most people is, yeah, he's still doing this with his business. But then what he does is he takes what's left over and he puts it into real estate, energy, right? That's commodities, right? For a business. And if you do any of those three, because those are government favored investments, then you pay zero tax. The difference between what Robert does and what most people do is most people are looking at an expense. Well, an expense, the difference between expense and asset is an expense. The purpose of an expense is to produce income, okay? But an expense produces income once. An asset produces income for years and years and years and years. So if you had your choice between putting your money into an expense, which produced income once, or putting your money into an asset, which produces money over and over and over again, who would choose putting money into an asset? Raise your hand. Right? And especially now where the tax benefits are just as good here. In fact, they're even better here because what Robert does and Kenny does, they add debt. So they're actually compounding their tax benefits. They're compounding their tax benefits. So by doing that, you get an asset that produces income over and over and over again. You don't pay tax over and over and over again. Okay, and you constantly have that cash flow, but you still have the asset. The asset lasts as long as you want it to last, as long as you make it last, okay? So I'm gonna finish up for a second and then I want you to have a little discussion here. Who can tell me what's the purpose of income? What's the reason for income? Purpose of income is cash flow. If your income, how many of you have people who owe you money in your business? Raise your hand, okay? That's not cash flow, is it? They owe you money. There's no cash there. They owe you money. There's no value to that money, to that income until the money comes in. Purpose of income is to create cash flow. The purpose of an expense is to create income. And the purpose of an asset is to either create income or reduce an expense. The only reason you should ever have debt is to produce an asset.
What the debt does, it increases my depreciation. Right?
It increases your depreciation and increases your returns.
Right. That's what I mean.
It does both. And here's where people get scared of debt. How many know people who are scared of debt? Raise your hand. Maybe you, maybe not. If you're afraid of debt, what is it that you're really afraid of? No, you're not afraid. You're afraid you won't be able to pay because you don't trust the asset. It has nothing to do with the debt. You don't trust the asset. Kenny trusts the asset. Does Kenny sound like he's afraid of buying real estate and putting $600 million of debt? No, why not? Because he's done this over and over and over again. He knows the asset will produce the income. He don't worry about the asset. Therefore, he wants as much of it as possible. But if you are not trusting your asset, okay, because you don't have the systems, BI triangle, you don't have that in your business, for example, okay, Greg can go out and borrow money on his business because guess what? How many think Greg pretty much knows what he's doing when it comes to his asset, his business, right? You trust your asset.
Absolutely.
Right?
I just borrowed $5 million.
There you go. He trusts the asset. So when you trust the asset, you no longer have to worry about the debt. It's irrelevant. If you don't trust the asset, don't be buying the asset in the first place. Forget that. Don't be buying the asset. His asset right here, how much does it have to produce for him not to be in trouble? Over 4%, right? He's paying 4%. So if his asset doesn't produce at least 5%, he's in trouble. Okay? But he's not selling the asset. Okay? If you're selling the asset, it's not an asset. It's inventory. Okay? Just to be clear. If you have something like, let's say you're flipping houses, that's not an asset. That's inventory. Okay? That's different. That's part of your operations. That's an expense. Inventory is really an expense because it produces income once. So flipping a house is inventory. It produces income once. It's an expense. It's not an asset. An asset produces income over multiple years.
But a rental property?
A rental property would be an asset. An oil well would be an asset. A business that produces income every single month, every single year is an asset. Okay? Those are assets. A dividend-paying stock would be an asset. Okay, most stocks aren't dividend paying, but that would be an asset. Okay, dividend paying stock. You know, a capital gain stock, that's not an asset, doesn't produce any income. Apple, Tesla, they're not producing income. Those are, in my mind, that's not an asset, doesn't produce cash flow. So I would never borrow to do that. Bitcoin doesn't produce income. Now, it may be a good way to hold money, right, as opposed to savings.
That's called a store of value. Does it hold its value?
Right. Gold, silver, Bitcoin, Ethereum, whatever. Okay. That's some place to stick your money. Okay. But if you want it to be productive and you want tax benefits from it, okay, then it has to be in this loop over here.
But if you stake your Bitcoin or Ethereum, then it becomes an asset.
Then it could become an asset, right? Because now you're earning interest on that on that Bitcoin.
Of the
Ethereum.
staking it for a period
That's
of
correct.
time.
That's correct. Now that's a very volatile asset, so that's still a very risky proposition. All right. So do you trust the asset? Let me put this in perspective. To Greg's loving this. Let me put this in perspective. Bitcoin's right around 50 right now.
Correct.
$50,000. If you knew for sure Bitcoin was going up to $2 million, I mean, without a question, you knew for sure it was going up to $2 million, how much would y'all buy? How much debt would you get to buy Bitcoin if you knew it was going up to 2 million?
As much as I could.
As much as you could, right? Okay. Kenny knows that his real estate is going to produce income. So what does he want to buy? He wants to buy as much as he can, as fast as he can, with as much debt as he can.
Wow. Great point.
It's trusting the asset.
That's good.
You can't do this without the education. You're never going to have an asset that you can trust without the education. So don't be thinking about, the worst question I've ever heard Robert get. I remember this really clearly, and he gets it all the time, but I remember one specific circumstance, and I can't remember where we were, somewhere in Eastern Europe. And this woman comes up, is kind of the hostess, and she comes up to Robert, and this is in the VIP lounge at the airport, and she's sitting with him. She goes, "So I have $10,000. What should I do with it?" Do you remember that? You get it all the time, I know. What should I do with it? It's the dumbest question ever. Okay? Well, the answer to me, in my mind, is spend it on education, because you're going to lose it anyway. Okay? And some of the education we get, one of the things that I've been learning from Robert is the kind of questions to ask. Right? Because there are stupid questions. How do I invest $10,000? That's a stupid question. I'm sorry. I disagree with people who say there's no stupid question. That's a stupid question. Let me give you a stupid question in my business. Is this deductible? Is this book deductible? How the hell do I know if it's deductible? I don't know whether it's deductible for you, but you could ask a better question. How do I make this book deductible? Now that's a good question. That's a good question. So to me, a lot of the studying, Robert's talking about studying, and he talks about all this finance stuff, but a lot of it's personal development type studying. How do we get better? Greg just said, I've never heard you say that before. Well, because I've been studying, and I figured this out like 6 months ago, Greg. That's why.
Like to cover you in copper. Put that right at the bottom of your feet.
So but that's the point, is that you're constantly studying, you're constantly learning, you're constantly improving. If you're not doing that, then like you said, Trina, you're going to get passed by anyway, so you might as well give up now. And the difference, if you look at what's the primary difference between this side and this side? These guys rely on a team, these guys rely on themselves. That's the number one difference between this side and this side, in my mind, is it's the team. These guys can have a mission. They can be driven, but they don't have a team, because they're not willing to give up control to their team or create the systems where they maintain control of the team and still have the team. Right? I mean, can you imagine having 500 accountants? It's scary. It scares the daylights out of me every single day, let me tell you. But it's a matter of creating the systems and having the leadership and having the mission and doing the training, doing the work. Then you can have the team. But until you have the team, you never can get big. You will always, that stands for small, and you will always be small.
And the other thing that happens, which Tom knows a lot of, is all of my partners came from bad partnerships. I met Tom because I had a bad accountant.
Yep.
She was an S and a crook. The other thing is my friends are, JW right now is going through it. If you hire a CEO, you hope they share the same mission. Right? Absolutely. I thought just because a person was an accountant and an attorney, I don't mention their names, that they were smarter than me. No. They were thieves. It's shocking. My biggest problems have been attorneys, right?
Yeah, it's really easy to rely too much on experts.
Yeah.
Okay, having a team doesn't mean you've got a bunch of experts. It means you've got a team.
And it never stops. I mean, you make mistakes, you learn, make mistakes, you learn, and that's how we learn.
Everything here is about cash flow, right? Either it flows out, and do what most people do, flows back to the business, which should create more income, flows into an asset, which creates more income. You borrow, you get debt, asset, more income, but it's all about cash flow. So every single thing, by the way, every investment is valued based on cash flow. That's a little secret. Doesn't matter if it's business, we call it a multiple. It doesn't matter if it's the stock market, we call it a PE ratio. Doesn't matter if it's real estate, we call it a cap rate, but every single asset is valued based on cash flow.